Let's move on and talk about a lot of stocks which are coming back after a very bad phase. In fact, from complete denial, now the streets seem to be have fallen in love with them. And one such stock, or case study, I would say, is Raymond. Look at the, in fact, 2 days back when they did announce their demerger of the real estate business, the stock at one point in time was hitting almost 3,500 rupees a share. So this is a case study in itself, and we're going to discuss it with Purenju, who is joining us. So Purenju, among others, let's first of all, thanks for your time. Uh, Today we are going to talk about this importantly because this could be Raymond today, and many of our viewers could learn from how to analyze companies in the throes of negativity. If the business model is looking okay and not shaken, it may actually pay very well to take a bet on it. You tell your experience with Raymond, with complete disclaimer that this is just a case study we are discussing. When you got in some 500-600 rupees a share, look at the value it has created.
Hi, good morning, Ajay. Thanks for calling me. Of course, we have been on ET now discussing about Raymond. I think since we started buying at around 350 to 300 rupees, it went down to, I think, 3 years now, 2021. It used to be available at around 2,500 crores market cap. Whereas the office building of this company is valued at around 7,000 crores. And the different verticals. Mostly people, general public feel Raymond as a company. It's the lifestyle business. What you see in the cities, the showrooms, textile business. But that's only just one vertical, which is now going to be demerged and listed separately. The Raymond Lifestyle, and this restructuring in the business. And reorganizing, different verticals. I think this has been talked by the management since long time, and it was all in public domain. But there was some perception issues regarding, and some personal problems of the promoters or family issues cropped in. That was getting more attention by the investing community than the fundamentals of the company. Anyway, we are very happy, and I think this is one of the largest wealth creators in the history of our portfolio management in PMS clients. So I'm very happy, and we discussed at least 3 or 4 times, all the way from 350 to maybe till it was 1,500 rupees for the viewers of ET now. See, this is a part of the theme which I used to talk in the last 5-6 years. Where the significant makeover of companies, especially with regard to the management, the promoter attitude towards minority shareholders has been evolving. It has to change. We had such a time, if you say 5 years ago, 10 years ago, how the 90% of the companies promoters have been behaving, like it is their own company. Public shareholders are somebody, unnecessary element in the company. That's the way 90% of Indian promoters have been regarding the minority shareholders. Things are changing. Now the regulators part and from generally other government agencies part, there is a compulsion for companies to change, to consider and respect minority shareholders equal to them as owners of the company. So this change is amazing, and this change will rewrite many hundreds of companies. It has been already happening. I'm not telling it is going to start now. So I was a bit early in this prediction. Since 2016-17, I have been talking about how what companies may change or many other things. So it's really happening in the Indian corporate system, and especially among the listed companies. And this is again a theme for investors going forward for next 5 years, I feel. Look at the business, how big it is and how promising it is. How will be the future of this company or the business after 5 years and 10 years? What is the global scenario? What is the Indian economy given opportunities for these companies to grow? And, there are such elements should be leading the investor's mind, guiding the investor's mind going forward. Because, of course, we are in a raging bull market. There is no doubt about it. And there is a structural change happening, a structural revolution happening, a structural growth potential for a very large number of, for the economy and many companies and many businesses. That is what is reflecting in the high perhaps the rich valuation of our Nifty or Sensex, even the way some of the small cap and mid caps are moving.
Right.
And definitely,
Parinju, I think what our viewers want to know is back in 2021, when you got into the stock, it was about what, 300, 400? Now at 3,100, what's the next price target and in how much time? And can one still get into Raymond? I think that's what our viewers would want to know.
yeah, hi Aisha. Now, I think mostly people might have been aware, companies splitting into two. There will be two listed companies now. I think 11th is the record date for the demerger of lifestyle business, which is having around 7,000-8,000 crores turnover. And one thing I would like to remind investors first, I'm not recommending this stock, but at the same time, I'm just making a valuation comparison for academic reasons. Even the whole company with its real estate business, lifestyle, and the engineering, which is coming up very fast, which can grow very big in defense and aerospace. The whole company put together their corporate office of 7,000 crores. So everything is quoting much below Manyavar today. Whereas I believe Manyavar is only a fraction of this company in any terms. Maybe they have a high profit margin right now. I don't know how much it is. I'm not talking bad about that company. So if you remember, when it was 22,000 crores Manyavar, Raymond was 3,000 crores. I think that's the first time we discussed on the channel. See, so this is value investing, nothing else. And I feel the three verticals of the company, which is very clearly mentioned by the management, the lifestyle, the real estate, which is really coming up, and the engineering. The engineering division of the company after the acquisition of Maini Precision. It's a wonderful company in defense and aerospace. So the engineering division, the three entities of Raymond is going to have some arrangement with the Maini Industries. And there will be two companies born out of that, as per the guidance given by the management. Two companies within the engineering. One will be automobile focused. The other one will be aerospace and defense. And it's not very small penny company. It's a significant business they are doing. And as you know, the growth prospects, this may be perhaps comparable with Asad Industries, PTC Industries kind of thing, coming to the aerospace and defense.
Right.
And the automobile also doing very well. And the real estate is also comparable with some, not maybe the top, the second line real estate companies with high valuations today. And the lifestyle, of course, comparable with Manyavar. So I feel this company as investors, we stay invested even though we have booked partially for some of the clients whose portfolio Raymond became 30% and more because of the growth in the stock price. So otherwise, I feel comfortable holding on to the company.
Okay. In fact, we spoke with the management of Raymond recently, and they told us what could be the potential revenue stream from their real estate business, which is getting carved out. Let's listen in.
I think that ability for us to get more JDA projects is very, very clearly visible. And we are on the close contact with the various people. And I think few more JDAs would get signed. And any JDA you sign, it will take 12 to 15 months to start. So I think in the next 3 to 4 years, what we are talking is easily a 4,000 crore revenue model with a 25% of EBITDA and a 25% IRR. So I think that is a very clear thought process with which we are working. As far as the challenge of the business is concerned, there are so many projects available to us that we are not seeing any dearth. As far as liquidity, which becomes another big question mark, I think we are uniquely positioned that we have a significant amount of cash available for us to execute the project. And because of the philosophy that we work with, that sell fast, build fast, and collect fast, that enables a very small amount of working capital which is required in order to grow the business at a phenomenal pace.
Right, so Parinju, just taking away from the kind of commentary that we got, I just wanted to understand, given the kind of involvement that we've seen with Raymond in real estate and particular projects worth 32 to 35,000 crore rupees, what is the impact of this move on their financials and how are you viewing it?
Now, you are talking only about the real estate thing?
Yes, demerger of real estate.
Yeah, I think they have started, going asset-light model, JV kind of things in a big way. And I believe, Mr. Gautam Singhania personally has got a real passion for real estate, and efficiency in the execution is already proven. And he is well focused on that, business, creating wealth for the shareholders. Even though whatever could be the criticism about other aspects, I'm telling you, he has done a wonderful job in managing this company and focusing on the core business and growing it and keeping the brand, very much intact. And the brand Raymond has been growing all over. So, see, in real estate business, the promoter's execution capability and attitude is very important. That way, I feel very, very optimistic about Raymond Realty. There is no doubt about it. And the engineering division, I think it will be mostly managed by Mr. Gautam Maini, the recently acquired company, Bangalore-based aerospace and defense company. I understand, a very capable kind of promoter with a good track record. So India is giving a wonderful opportunity for that engineering division also. So now this will be X on, I think, day after tomorrow. And what will be trading in the market, the realty business and the engineering business. When we say engineering division, money will be holding around 65% in the new entities. And the 35% will be held by Gautam Maini, the original promoter of Maini Precision. And the most importantly, what we see today is, the promoters, the management of Raymond is doing full value unlocking. I have seen even highly ethical companies, they make it a holding company and enjoy all the wealth, and there will be huge discount for the wealth of the company in a listed company. So in the case of Raymond, they are fully opening up and fully sharing that wealth with all the shareholders. That is called real ethical, wealth creating act. I really respect and admire that.
Right. Purinju, your other wealth creator ideas in the past have also been Tata Communication, Protean, J. Kumar, Equinox, Piramal Pharma, etc. Are still bullish on these names and anything that stands out?
Yeah, I think these stocks are very we hold a stock when we feel it's comfortably valued, not in in the bull territory or overvalued kind of space. So we have been selling some stocks, and I think Protean is one of our recent picks, as we discussed. It's because I think you asked because of the bulk deal, because the stock price came down after the initial fancy, and it's a futuristic business. So we thought we should own this company for the next 5-10 years, and that's why we are holding. So many of the stocks, what you mentioned, they are not like too much run up kind of thing, and we have to be cautious. Whatever said and done, markets are cyclic. We have a visibility maybe for next 5-10 years as an economy in which our companies are going to do very well. The corporates are going to grow in, firing on all cylinders. That's what we see today. But there can be challenges. There can be good. To be very frank, last 2-3 years, we'd never had a serious correction. So that's the reason one has to be cautious. One has to be prepared for those kind of minor corrections or, maybe a serious correction some point of time. So one way, that doesn't mean you should sell your stocks and sit on cash. It basically means be cautious in selecting the stock that individual businesses are going to be important. How they are valued. Are they crazily valued? Are they operated by some HNIs and taken it to dizzy heights and still kept there? So those kind of things are more important. And India still is a paradise for stock picking. That's what I strongly believe.
For taking time out and joining in, Purinju. It's been a pleasure getting you on board, understanding your overall stock strategy, as well as, of course, an extensive view on Raymond. Time to take a very quick break. Stay with us. We've got lots more lined up on the other side.
If you like this video, then like, share and subscribe to ET Now.